Hi everyone, this is Robert Eldridge again with annuitycampus.com, and today I'm going to discuss CD rollovers. You're probably watching this video because you have a certificate of deposit at the bank and the CD is coming due. So I thought I'd shoot a little video on what to look for and what certain things mean. And what I mean by that is, why is it that a bank down the street or across the country can offer maybe a higher potential interest rate than what your current bank is offering? Well, why is that? Well, the banks all get their money from the same place, which is the Fed. There's a lending rate, okay? So if all things being equal, why is that? Sometimes banks will do what insurance companies might do. They might buy up the rate. So what I'm saying is, if you go to websites like bankrate.com, you'll notice anywhere from a 1 to 5 star rated bank. And the 1 to 5 star rated bank can mean a big difference between you maybe losing your money, okay? So what they do is they'll give you a higher interest rate at a bank that maybe has a 2 or 3 star versus a 4 or 5 star bank, okay? So what are you giving up? Essentially you're giving up some interest for more safety. And also on annuitycampus.com, on the left hand side I placed the FDIC failed bank list, and it goes directly to the FDIC's website and shows the failed bank list for, let's say, the last 10 years or so. And you'll be quite surprised. And a lot of those banks at one time probably had higher interest rates on their certificate of deposits because they were trying to buy the customers to have them come in and make more deposits with them, okay? I wouldn't call it a bait and switch, but that's just how it works in business. You give a little bit to get people in the door, and so those are things that you want to look for. You want to look at the ratings of the banks on bankrate.com. You want to check it out. There's other banks around the country as well. I mean, you might be surprised. There might be a 4-star rated bank in Arkansas that'll give you maybe a half a point or a point higher on your CDs. The only difference is maybe you're in California and you can't really go down to that bank when you want to roll the money over. So just keep those things in mind. Also, when you're doing a CD rollover, you might want to consider what I do, which is annuities. If you're looking, most people have CDs because it's safe, number one, and depending on the amounts. Number two is some people might take the interest only, and that's it, leave the principal. Great. But what happens when you do that? Well, you're going to get taxed, okay? And then you got people that just want to keep the money in there and keep rolling it over and never really touch any of the interest or principal. And even if you're not using the money, you're going to be taxed as well. Well, with annuities, you don't have to worry about any of that. So if you want income, most annuities allow you to take interest only withdrawals if you're just looking to do that. And also, if you aren't looking to use the money, you've got a fixed annuity and it's tax deferred. Annuities are probate free to your beneficiaries, okay? Some of them give you up to 10% free withdrawals. And there's all kinds of different benefit options when it comes to income. So you might give up maybe a half a point, but you're actually gaining more because you're not paying taxes on money you're not using. So anyway, if you have any questions or concerns, please give my office a call. I'd love to have the opportunity to speak with you and go over different annuity options and CD options for you as well. In addition to that, make sure you go to the website annuitycampus.com, scroll down, get signed up for the annuity e-newsletter that comes out around the 1st of the month. Thanks again for your time today. Bye-bye now.